What is working capital and why it matters for every business? A profitable company can still fail if it runs out of cash. That's why today we're talking about working capital, the real lifeline of any business. What is working capital? Working capital tells us whether a business can meet its short-term obligations and continue operations smoothly. Simple formula. Working capital equals current assets, current liabilities. Current assets include cash, bank balance, receivables, inventory, short-term investments. Current liabilities include payables, short-term loans, taxes payable, accrued expenses. Why is working capital so important today? In today's business environment, margins are tight, and cash cycles are longer. Working capital helps a business understand liquidity position. Can the company pay its bills on time, salaries, vendors, rent, and taxes? Short-term financial health. It shows whether current assets are sufficient to cover current liabilities. Operational efficiency. How well is the company managing receivables, customer collections, payables, vendor payments, inventory levels? Why investors care deeply about working capital? For investors, working capital is a capacity indicator, not just a number. Investors analyze whether the company is cash efficient, if growth is funded by real cash or delayed payments, how disciplined the management is in handling receivables and payables. Key insight: a company with poor working capital management often needs frequent funding, no matter how good the revenue looks. Positive versus negative working capital. Positive working capital indicates surplus short-term funds, enables expansion, hiring, and growth, shows financial discipline. Negative working capital cash stress, delayed payments and operational issues. Red flag during due diligence. Simple example: if a company has current assets, 50 lakh rupees, current liabilities, 35 lakh rupees, working capital equals 15 lakh rupees. This 15 lakh rupees is the buffer available to run daily operations, absorb shocks, fund short-term growth. Common mistake businesses make. Many founders focus only on profit, not cash flow. You can show profit on paper and still struggle to pay vendors, delay salaries, miss tax payments. Profit is opinion, cash is reality. Working capital is not just an accounting metric, it's a management discipline. For founders, it keeps the business alive. For investors, it shows how capable and disciplined the company is. If you want sustainable growth, working capital must be actively managed, not ignored. If you're a founder or investor and want to understand your real cash position, start with working capital. Follow for more finance insights that actually matter.